What is the stock exchange? The stock exchange is nothing more than a giant global network that tends to organize a marketplace where huge sums of money are exchanged daily. Each year, over 60 trillion euros are traded in total. However, it's not tangible goods like shoes or phones that are traded on this marketplace, but primarily securities. Securities represent rights to assets mostly in the form of shares, where share stands for a share in a company. But why are shares traded in the first place? Well, the value of a share relates to the performance of the company it represents. If you think about the value of a company in terms of a pizza, the bigger the overall size of the pizza, the bigger each piece is. For example, Meta platforms can significantly increase their profits with a new business model. Consequently, the size of the company's pizza will also increase, and so will the value of its shares. This, of course, benefits shareholders, as a share previously worth $32 could now be valued at $94. So when it's sold, this represents a profit of $52 per share. But what do Meta platforms gain from this? The company can raise funds by selling the shares and then investing or expanding its business. Meta Platforms, for instance, earned $16 million from its listing on the stock exchange. However, the trading of shares is often a game of chance. No one can say which company will perform well and which will not. If a company has a good reputation, investors will back it, while a company with a poor reputation or a poor performance will struggle to sell its shares. If a large number of people buy weak shares because they see great potential behind an idea, their value will rise as a result. This can particularly benefit young companies, because even though their sales might be declining, they can generate cash by placing their shares. In the best case scenario, this will result in their ideas being turned into reality. In the worst case scenario, this will result in a speculative bubble. The value of Germany's top 30 companies is summarized in what is known as the DAX share index. The DAX shows how well or poorly these major companies and their economy as a whole are performing at the present time. Similarly, stock exchanges in other countries have their own indices, and all of these markets together create a globally networked marketplace.